Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Friday to you guys. Also, happy Cinco de Mayo. I hope you guys get your siesta or fiesta on this week. It is Friday, May 5th. We got the big day today, the jobs numbers coming out. So let's jump right into it. We'll start off with the big one, the non-farm payrolls for the month of April. So back in March, we actually had a revision here. We had like 98,000 initially. Was the jobs. It was revised lower, almost 20,000 down to 79,000 for the month of March. Now, forecast for month of April is 190,000 and came in at 211,000. So if you look at that more realistically, that exceeded about, for this month. So it kind of almost offsets one another when you think about it. Even though it sounds on paper 190 forecast coming in at 211, exceeding that, but we also revised March lower there. Another good news is unemployment rate month of April is we had previously back in March we had 4.5%. We thought it would remain about the same rate, and it dropped down to 4.4%. So good overall news for job numbers. Another good thing was the U6 number for the unemployment rate was at 8.6 and it dropped to 8.3. This is the best number we've seen since like 2011. So since the market really started crashing. So it's getting more people off the sidelines, getting into the labor force. So we're getting some pretty good growth here in terms of jobs here, which is obviously a very good sign here to help out the economy. It's moving forward, but it's not great, but it is moving forward. It's moving in the right direction, which is will lead to some more optimism here. Last but not least, we got the average hourly earnings for the month of April. So we had a 0.1% growth in month of March. Forecast for April is supposed to go up to 0.3, and it came in expectations at 0.3%. So this is good, but we need a little bit more on the average hourly earnings or our wage growth. So this is what's keeping inflation actually down quite a bit due to we're not getting enough pressure from the inflation or wage growth in this area, and this is why inflation is not really reaching so far the 2% range that the Fed would like it, and it actually dropped from 1.8 down to 1.6%. So we need a little bit more in terms of wage growth here. So hopefully we can see more people making more money, get that to keep up the cost of goods here. Right now the stock is mixed. The Dow is down currently right now. Now, the reason why the Dow is down while the others are up is because what happened with Warren Buffett here. Warren Buffett said that he sold nearly a third of his IBM shares, which is creating a huge sell-off on IBM, which is creating a lot of concern, which makes up a pretty big component of the overall value of the Dow. So that's why the Dow is down compared to NASDAQ and S&P, which are up. Something else that they're repositioning themselves and getting ready for is the French elections. They're having their final elections between Macron and Le Pen on Sunday. So stay tuned. Right now, the polls favor Macron, but as we've seen, polls really don't matter so much. Over the last 12 months, we've had a lot of big surprises from Great Britain leaving the EU to Donald Trump getting elected here in the United States. So again, this is something that's pretty big and it's getting making the investors real jittery because if Le Pen, Macron is favored more heavily, but Le Pen, if she somehow gets in there, she's the one who wants to maybe pull France out of the EU, and that would create a lot of market instability over there. So they are a big power in terms of the EU powers over there, right there with Germany. So that would make a huge difference in terms of what's going to happen with the EU, and might be the final straw in the camel's back to maybe break up the EU if that comes to fruition. So we'll have to wait and see. We don't know for sure, but that's just speculation right now. But watch that on Sunday. If you want to do your homework, watch that on Sunday and be prepared for some very big volatility there. Now, yields are, the 10-year Treasury, the yields are up at 2.35% here. So we'll touch on that, why that's important here once we look at mortgage-backed securities, but the yields have been kind of creeping up here as a result, so it's something to keep eye on here. So we'll just jump right lead that into our bonds here. Now, here's our first floor of support here, and we're down below that. We had the 10-day moving average down here. We got the 25-day moving average up here, so we got double resistance now overhead here. Now, the first hour and a half, we had a lot of volatility. We touched off the 10-day moving average. We even touched off the second floor of support here. And we were at one point now, when I looked after about an hour and a half, we were like 6 basis points under where we left off yesterday. As you can see, we got these fluctuations here. Right now, we're up about 6 basis points positive, so that's 12. So not really enough to change pricing from what we are yesterday. We're going to probably see a sideways pattern. Now, the reason why that 2.35% Treasury is important is because it's on the wrong side of the wrong side for us to really see some improvement in terms of mortgage-backed securities. So right now we're getting a little bit of a reprieve because of IBM and some the movements, but because where it's at 2.35, if it was under 2.35 or 2.3, I would say go ahead and kind of float around. But because we're on the other side of it, above it, I would say kind of locking in. You could try to wait till Monday, but I would say maybe start locking in because we could see further erosion in terms of rates, because the U may go up, continue to rise, and that would push the bonds lower, which would drive up interest rates again. So just be a little bit cautious going forward here. We've been reaching, we even went up as much as 2.6, I think 6.1. And if we go above that, we could lose a lot further here. We might even drop down to a lot further here, down the 101, 100 range. So if we go above the 2.61 threshold. So again, be cautious here. May want to lock in, but rates are about the same as what we left on Friday. This looks somewhat promising, but again, Sunday might be the end all. It might help us if Le Pen gets in there. Bonds might help out the mortgage-backed securities, as stocks, obviously stocks would take a negative view on that, but again, it would help out mortgage-backed securities, I believe, on Monday if that happened. All right, folks, so that pretty much concludes everything. Sorry for the long, drawn-out video here, but if you guys want more video updates or more updates, just come over to Mike Bjork on Twitter. So come over to Twitter. You can find me at Mike Bjork. I do post updates throughout the day, including market close. You'll be able to get a better scope as to where the market is throughout the day if you want to come over to Twitter. If you guys are in the market for a mortgage, whether it's a purchase, I can help you with the pre-approvals and then financing your home. Also, if you're looking to take money out or gain better rates on your properties, I can assist you with that as well. We do got a wide range of loan programs out there, so just feel free to reach out. Have a wonderful day. Thanks so much for watching. Enjoy your Cinco de Mayo and great weekend, and we'll catch you guys on Monday again. Thanks again for watching. Bye.